Hey traders, Cousin Vinny coming to you from theclosingprint.com on January 25th, 2015 with a look at the week ahead. In this video we will cover how we see the spiders setting up after a nice week. We saw a nice rally and a profit taking session on Friday after Mario Draghi announced increased bond purchases and QE style easing. Those are the bullish scenarios. Bearish scenarios are any weakening to the current inflows into the stock market. If some of that money continues to flow into the Stoxx 50 and Europe out of the S&P 500 and US indexes, then we could possibly see a little bit further downside. Currently, with seasonality being strong the last week of January, however, we're looking for a bounce. I'll show you why. In addition, we have tick cumulative on a buy signal. NYSE, the summation index of NYMO data values, are positive. We had a bullish cross last week. We've talked about the New York net new highs, net new lows, breadth on the New York Stock Exchange. We saw a nice 8% up day last week, so we're seeing more accumulation than distribution. We saw no major distribution days greater than 90%. We're looking at the bond stock ratio, which was rejected at the 65 MA on the weekly, and that moving average is somewhat flat. Seasonality, as we spoke about the last week of January being positive, months that start and finish higher typically over the last 5 years have been 43% versus 83% in the months of February, March, and April, with January being 43%. So we still have some upside possibilities if we look at the weekly. What we're looking at in terms of setups are relative strength stocks that held up well during the profit taking on Friday. We'll look at our scans for that. And notable again are gold stocks that continue to move higher and crude weakness. This is a chart of the spiders 5-minute, and what we see here is a trend line going back to the 16th of January, where we kept seeing a bounce off of these levels, and we're currently trading right at that level, as well as the 382 on the recent Fibonacci pivots on the daily chart. Notable are the slow stow 14.1 is an oversold territory. The 144 could bounce in this area like it did previously on the 16th and again on Tuesday. So we're looking for that to turn right at this trend line, as well as the pivot on Friday for a move at least to this upper Bollinger Band, test the 206 area, possibly break out and test this upper trend line. In addition, MACD is in an area that we saw bounces previously. This is not a prediction, it's more of an observation, which is the way we like to enter our trades on the start of the week. Coming in a bit closer, this is the 60-minute spider chart. Note the volume by price bar that we mentioned would probably be resistance. That held. This could be viewed as a flag currently right at the 10 period moving average, 12 period here in this case. We have the 26, also the 20 period moving average, the center of Bollinger Bands. Note the upper Bollinger Band is turning in, lower Bollinger Band is turning up, continuing to move up. And we have the 382 from these pivots on the 16th up to Thursday's high. We have that 382 level. We also have the 200 period moving average right along these levels to consider as support areas. If that fails, we have the 50% retracement of the highs from the pivot low on the 16th again to this volume by price bar level and the 50% level as well. Don't think it's going to get down that far, but it could happen. Note slow stow 5-1 is passing through 50, could reach this lower level fairly quickly on a move lower down to these areas and then a bounce. Looking at the daily, we're in this descending channel. Previously, this trend line was at this pivot high, which we found resistance at as well. That's the January 9th pivot high. That was resistance on Thursday, so we have our Fibonacci levels. If we manage to break out of this descending channel, the 1, 2, 3 extension is right overhead, as well as the descending Bollinger Band. So we're right inside of this volume by price bar. Slow stow does have a little bit of room. It could continue to move higher on the 14-1. The MACD, longer time frame, 1939.9, could conceivably move through and push higher, giving us another cross on all three of these MACDs. And finally, the Spider weekly chart. We note that we have at the area of 200, 201, an area of support where we had 3 tails down on the weekly chart. We saw a tail down in the month of December where we found buyers at the 20 period moving average, the green line. Volume could be better, and we see Stochk RSI is getting towards the oversold territory and could turn. So on the weekly chart, this looks pretty productive. We closed above the shorter term 10 EMA, which is a good sign. We could see a move higher, could see a move lower. We'll cover some more bullish and bearish caveats in this video. Looking at the industrials for a moment, we do see a lower high and higher low, so we have a bit of a triangle pattern here. We stopped right around the 618. We have the moving averages right in the same vicinity. Slow stow has reached overbought territory, and MACD is not giving us much of a signal. Looks like it's flattening out on the 1939. Remember, this is only 30 stocks. Just want to point it out. We stopped at this volume by price bar level up here. So we will watch to see how this plays out going into the week. This could turn into a sideways flag and then a move higher, as we mentioned about seasonality going into the last week of January. Here is a chart of the NASDAQ Composite Index. What we note this week are a lot of very large companies reporting earnings. Monday we have Microsoft and Norfolk Southern. Tuesday we have Apple. Wednesday we have Biogen and Boeing. Alibaba on Thursday, along with Celgene, Amazon, and Google. All of these look pretty good going into the week, so this could be a big catalyst for a move higher on the comp. So you have to keep that in mind going into the week. Looking at levels on the comp, we have a retracement of this move higher last week. Note that we had quite a week from Tuesday on. We could see a 50% retracement, obviously, which is not on this chart. We have this volume by price level as support, which would be right around the 382 Fibonacci levels. And we have the moving averages, and we have the 20 period. So conceivably we could look to the upper Bollinger Band with good earnings. Note that in the XA50R, number of stocks trading above the 50 period moving average is at 64%. So this could turn up, it could very well turn down, but I'm thinking earnings will probably be pretty decent. Apple had the iPhone, just about everybody I talked to has the iPhone 6 that had iPhones in the past. We have iPads for Christmas. Those sales are going to come out, so we'll see how that turns out, but I'm thinking Apple does quite well. Note all the volume last week, as well as Friday, the preceding week, being we're coming off of a shortened week and going into seasonally bullish period of the month, last week of January. Note the volume by price bar up here as well. Most of this is green. There is some red. So we do have some resistance, but with good earnings, this could easily be tested this week. Note the NASDAQ Summation Index. We'll look at the NYSE in a minute, but this one is turning. We could see a crossover like we saw on the NYSE last week, where we had a bullish cross on Thursday. Tick cumulative continues to stay on the bullish side of the 10 EMA. The Elder Impulse chart, still we have a green candle on green stick on Friday despite the selling, so that's looking pretty good. NYMO we'll be looking for NYMO to increase and move higher to give us an early indication which direction we'll be going in with regard to the spiders. Trend was elevated all day on Friday, so we weren't surprised to see weakness in the last 2 hours of the trading day. Now this is a chart of the S&P 1500 new highs minus new lows percent, and we can definitely see that the last week we are looking pretty good. You can note prior buy signals where histogram pushes over 2% here, and we continue to stay on that buy signal despite the fact that we saw some selling on Friday. One other thing I forgot to mention is that we saw a retracement, but it wasn't greater than 382 Fibonacci inside of this candle. So we did not have a reversal candle. It's more of, we're thinking, a flag to a move higher signal for the week. Now looking at the Elder Impulse daily on the S&P, I just wanted to point out the New York Stock Exchange up-down volume. We saw a little bit of selling on Friday, but for the most part, buying has trumped selling over the last 2 weeks. We saw a nice spike 2 weeks ago to 7.5, and then again on Thursday. Early it looked like it was going to be 80%, so I made a mistake when I said that. I was just restating something someone else said on Twitter. Looks like we had a nice 50% accumulation day on Thursday, so that looks pretty good going into the week as well. Part of the 1500 are the S&P 400 mid-cap stocks. This looks pretty good as well. This did not retrace as much as it did on the big caps, so that's something to keep in the back of your mind. We have a MACD cross as well on the S&P 400 mid caps. Let's take a look at the small caps. We can see the Russell. We have a little pivot here, a doji, spinning top on Friday, held right at the 20-period moving average, the center line of the Bollinger Bands. So MACD histograms continue to drift higher, and slow still looks like it continued to move higher as well. So let's look at the small cap 600, the S&P 600 small cap. Note that we had a very large candle on Thursday, and we didn't even come close to a 382 Fibonacci extension. Note the extension of this trend line that we're trading just above, right at that level, as well as a 20-period moving average. We have a little bit of upside left in the slow still 5-1. The 14-1 shows considerably more momentum possible on the small caps, so watch those this week. Histogram and MACD are giving us a cross of the zero line. So small caps look the best so far in our analysis of the weekend. Some other indicators we like to watch are the staples versus the cyclical sector, XLP, XLY ratio. When this ratio drops, that's bullish for cyclical stocks. We can see what happened. This is the gray area back here is the S&P 500. As staples performed, we saw the sell-off, and as cyclicals started to perform, when they peaked and started moving lower, we saw the S&P 500 rally. We saw that big dip in October, of course, over the Ebola second case scare. Cyclicals again started to continue to move lower, this ratio, and the S&P 500 continued to move higher despite the little V bottom we had here in December. And now we're starting to see a peak in this indicator again. watch for this continue to move higher. It will oscillate, but developing a descending channel, descending wedge would be good for the markets from a bullish perspective. If you're thinking bearish, you want to see this indicator pop higher and this become an ascending channel to the upside. Now, looking at volatility for a moment, the VIX, which obviously we pointed out you could fade this move by going long SPY or SPY calls. We did that directional trade and we took most of our trade off on Friday, and we do have some weak fives that we continue to swing. Now, we note a little bit of firming on Friday. However, the trend is down. You can note the moving average, the 10 period, is starting to point down, and we'll be watching this indicator for direction going into the week as this trades off the recent highs. Now, if we look at the ratio between VIX VXV, we see that we're in the bullish territory below 90%. We're looking for a move down to the 84, 85, the 82, 84% levels for an indication that we are overbought and could see a move to the upside on this ratio and a commensurate move on the spiders to the downside. Another interesting indicator developed by Joanne Klein on stock charts, credit to her, the ratio between the pro-short shares S&P and the S&P 500. When these narrow, you can see that respectively the S&P 500 rallies, and when these widen, you look for a move lower, and so on. You can see lately it's debatable, but we are starting to widen somewhat. So will this indicator continue to move lower? We'll look at the 60-minute chart for a little bit closer inspection, and we can see this is pretty much flat. So we'll be looking for this indicator to narrow and move back towards each other in the week ahead if we do in fact anticipate a bullish direction in the market, bullish bias. If we have a bearish bias in the market, you want to see this further separate and widen like we saw here, the cusp between 2014 and 2015. Looking at commodities for a moment, copper continues its downward path, has lost its correlation to the markets if you believe the Fed data, and that you would expect this indicator to be moving higher with the market apparently looking more robust. Let's take a look at gold. Remember, we noted a couple of weeks ago that we were breaking higher, the Keltner channel was turning up, and Bollinger Bands had expanded quite dramatically. So we're watching a flag here if the US dollar decides to move in the opposite direction and weaken a little bit. We could see a further move on gold. Crude weekly, we saw that bear flag that many people were pointing out, similar to the one we saw in December. Breaking lower, we have this low at 44.20 this week, so that'll be something we'll be watching as well. It's been a drag on the S&P 500 for quite some time, where they were pretty closely correlated. As this index moved lower, it dragged the S&P 500 with it. The silver chart also looks good. SLV is flagging out here. We had our moving averages crossover in early January. We have this volume by price bar resistance up ahead in the 1875 level. Indicators are overbought, so we could see this continue to flag as these indicators move back down into oversold territory and possibly turn back up. So let's take a look at the bonds for a moment. This is the 30-year yield. Note we're still in a downtrend. We're at lows we haven't seen since World War II. If we look at the longer term chart of the 30-year yield, we can see where we are. We're in this descending channel, and we note that we are holding off of that lower channel. Do we revisit those levels? No one really knows, but with respect to the economy and the Fed, we anticipate that they want rates to continue to stay low so that they can continue to unwind their bond purchases and the debt that they've accumulated over the last 5 years. Looking at the 20-year bond TLT, we hit this upper Bollinger Band, second standard deviation. We're moving sideways. If you're in this, congratulations. We are still waiting for a move lower, at least to the 20 period, to give us a better edge on an entry into bonds. We will not chase it, however. Here is a chart of the US dollar monthly, a 20-year span. Note we broke above these previous support levels, which became resistance, and broke higher. This is a function, without going into great detail, this is a function of limited dollars supply and dollars being loaned out to other countries that need dollars to finance their debt. Therefore, that diminishing supply of new dollars are one of the reasons why this trend in the dollar continues to move higher. So let's take a look at the IBD 50 stocks. This was from the week of January the 11th that Mikey sent to me. I haven't updated this group, but this is something we watch as well for indications whether we should have a slight bullish or slight bearish bias by virtue of these setups here. We had a higher high on ACT on Friday despite the move lower on the spiders. So we watch for these stocks to give us an indication which direction we could go. If all of these stocks look bad, that doesn't give us convincing evidence that we could see a move higher. However, if these stocks are moving higher, it's an indication that we could start to see firming in the indices where we're looking for same for a trade indicator. Advanced Auto Parts, Acorn holding the 10 period, Pharmaceuticals, Alaska Air Group, these all took off last week, literally with lower crude prices, and I imagine that they're hedging their fuel prices going into mid-year. Alexion Pharmaceuticals, nice descending channel pattern, could break out. Note where slow stow is in MACD. Align Technologies, we tried this one last week. We took it off for a small profit on Friday. We're starting to test the midpoint of this move higher. Note that we could possibly get back into this stock again. We're looking like we could flag and move higher. 30-minute, you can see where our entry was on the 22nd. We came up, hit those highs in the morning, and started to taper off the rest of the day. So we took those profits off the table. Ambarella, holding the 20 period moving average, looked pretty good. We saw buyers step in, moving higher. ABC, breaking out of a nice horizontal trading pattern that we pointed out over the last couple of weeks. AmTrust Financial Services, it's back above its 10 period moving average. It's a positive sign. MACD's above. This is a triple buy last week. This looks pretty good. If it gets through the 20 and the 50, this could continue to move higher. Note the volume by price resistance levels. MACD's giving us a cross as well. Apple broke out of this descending wedge pattern we talked about last week, above the 50 period moving average. Earnings are on Tuesday, so keep that in the back of your mind. We have the upper Bollinger Band, we have a volume by price bar. If Apple sandbags and we see a blowout earnings, which is conceivable, we could see the Bollinger Bands open up and start a new trend to the upside on Apple. Asbury Automotive stopped right at the 50 period moving average, still looks pretty bullish. AutoHome doesn't look that great. Avago, Bollinger Bands are starting to expand. We pointed this one out last week as it tested this upper trend line as a buy on Friday 2 weeks ago, and then it moved higher on Thursday as well. So that looked pretty good, grinding between the 10 period moving average and the upper Bollinger Band. Car, we got stopped out of this one, a trailing stop I should say. We had a nice dollar profit in that, so that one's looking okay. It still held the lower Bollinger Band, the ascending trend line, as well as the 50 period. 10 periods just overhead. Slow stow does indicate we could see further upside, but it's a little iffy right now. volume by price level support on CAR. Baidu, we pointed this one out on Wednesday, Thursday. Some of you might have taken this stock. Saw a nice dragonfly doji there, long-legged doji, and a move back above the 50-period moving average. Had nice volume by price support. Everything going for this stock going into the week. I don't know when earnings are, but I got to suspect that they're soon. BitAuto saw a test of lows, lower Bollinger Band, holding off of that level. We're continuing to watch this stock for buyers to step in. We have this volume by price level, resistance over ahead at the 68-69 level. Semis got hit on Friday, along with AMBA and a few other leaders in the group. Celgene looks good, moving higher. Cerner Medical Equipment, remember we pointed that one out last week as a possible breakout. We did see that on Thursday, long-legged doji on Friday. Everett Life Sciences, medical supplies as well, moving sideways, watching that one. Facebook, this was a big surprise. We saw the sideways pattern and it continued to hold. So we're back above the 20 period. We have earnings in the near future. So things look pretty good on Facebook. Note Slow Stow and MACD. FleetCor showing signs of moving higher. Foot Locker, so-so. It's a cyclical stock. Remember our comments about cyclicals versus staples. We could see that give us an early indication this week with that ratio indicator. Note where Gentex held right at the 50-period moving average and this descending trend line. We're thinking this could get rejected and move lower back into this pattern for a short going into the week, but we need confirmation. Gilead, this was a really good one off the 200 period. There's a test, it's not shown on the chart, but 200 periods down here, tested it, a hammer. We saw a nice inside day, and then we continue to move higher off of this lower Bollinger Band. Signal for many. Slow Stow turned up as well as MACD, gave us a cross, and we continue to move higher. We got long on this one in TRBCX, the T. Rowe Price Growth Stock Fund, which had a pretty significant position in Gilead. So we bought more at that point, and this stock just continues to move higher, looking pretty good on a black swan event. HDFC Bank, this one was a call 2 weeks ago. This one broke out and just never looked back. Slow Stow is overbought. Note the volume. This one could come back in a little bit. Look for a flag, 10 period catch up, and then a move higher. Illumina, right back up to this trend line, ascending triangle pattern. Watching for a signal on this one, possibly a move sideways, and then a breakout on volume for a trade on ILMN. Lithium Motors, this is one we pointed out a couple of weeks ago in this pattern. Came down, tested this breakout area, and then took off last week. So if you took the trade, continue to move your stops under each preceding day low. That'll keep you in a trade longer, and you could let the profits run. Manhattan Associates, testing these recent highs and looking pretty bullish to me. Monster continues to move higher. No setup on that one. NOAA. NXP Semiconductors did well despite some of the other semis not doing so hot. Trading aside on top of this breakout level, moving sideways and giving the stock time to move higher. O'Reilly Group back above the 20, looking good. Old Dominion Freight, note the transports, keep an eye on them. Testing the 20 period here and trying to move higher. Got the 50 period moving average overhead, as well as this little curvy pocket and a volume by price level above, right around the 76 level. Note Slow Stow, MACD are all giving an indication we could see further appreciation in prices on Old Dominion, ODFL. The last group, Packaging Corp of America, we pointed this one out over a week ago. We saw a really nasty candle on Friday, so that probably stopped out most of you. Hopefully you didn't hold into that. You would have gotten stopped out right around the 61 area, 60.75, so you would have kept most of these profits. Ross Stores continuing to move higher. We saw a spinning top on Friday despite the move lower on the S&P 500. Sherwin-Williams continues to boggle my mind that a commodity chemical and paint company can be trading at $275 a share. It is what it is. Price is king, so trade price. That'll keep you out of trouble most of the time. Skyworks Solutions. LT was looking at this trade a couple of weeks ago. Nice call on that. Breakout level and moved higher. We mentioned that one as well last week. Don't know much about that company. Save, another airline, not doing as well as the other ones. Tractor Supply, trading above a breakout level, watching this spinning top. Doji, seeing sellers up here at the upper Bollinger Band. Slow Stow is in overbought territory. MACD showing mixed signals. So we're above this volume by price level. If we come back down and test this again and bounce, that would be a nice buy signal on Tractor Supply. Ulta, nice breakout level. We've talked about that last week as well. Continuing to move higher on this specialty retailer. Remember, as these stocks continue to move higher, that bodes well for the S&P 500 to move higher as well as the NASDAQ. VRX, Valiant Pharmaceuticals. Keep an eye on IBB and XBI, the biotech sectors. We're breaking above these levels. We have a spinning top above that candle on Thursday. We're overbought, so nice flag here. 10 period catch up. Maybe we got another trade to the upside. Watch for any weakness. You could see $2 or $3 downside fairly easily on Vertex. And it looks like we have one stock left. Visa held this flag level that broke out in November, moving sideways range, possibly see a test of this upper area depending on earnings, and prices getting rejected at the 20 period, and we see the 50 period moving average holding prices as well with a volume by price support level. This is not one of our favorites, but Slow Stow is pointing higher on Visa. Okay, so this is Cousin Vinny coming to you from theclosingprint.com. For you new traders, be sure to check out these top 5 or 6 videos, which will give you a better edge on understanding the markets, taking setups, and where to position yourself for the highest risk reward on your trade. In addition, if you don't subscribe to the blog, this is a spam-free site. Enter your email address in here and you can get these delivered to your email every day. You'll note my tweets are here, the watch list for the week or the day. You can just scroll down through these, keeping track of the trades that we're looking at, whether they're high-type flags or Bollinger Band setups. It's also a place for me to document the trades and thoughts going into the weeks. So I hope this helps. Take care. We'll talk to you on the stream on Monday.